Scott Bauer, the CEO of Prosper Trading Academy, standing by. Scott, good to have you with us to start the week here on the Future Show. Let's begin this morning by talking about how we've seen the coronavirus and concerns tied to it being a health crisis. I guess I'm wondering, is the concern here that it could become an economic crisis as well?
Yeah, no doubt about it. And we don't know the impact yet, Ben. We don't know whether we're going to see an abatement of this in a week, a month, 6 months. Obviously, hopefully it's much sooner rather than later. And the longer this extends on, the more uncertainty it brings to the marketplace and the more of an impact that it can not only impact the economy in China, but global economy as well.
Yeah, and oftentimes when we see that uncertainty, it's not uncommon to see that flight to quality or that safe haven type bid come in the U.S. dollar. Can you speak to us a little bit about what this means for the U.S. dollar, Scott, in terms of its relationship with some of the other foreign currencies that we watch?
You know, the dollar actually had been a little bit weaker recently, but you know, this is one of those flight to qualities now. So we are seeing some strength, and you know, you're seeing the dollar bid up a little bit because of the effect of the uncertainty that you just talked about, because we don't know how much this is going to impact global economy going out 3 months, 6 months through the end of the year. So, you know, you're obviously seeing the yuan it got pummeled, absolutely pummeled. It's trading over 7 for the first time in quite a while, but it's not just the yuan. You know, you're seeing the Aussie dollar and other dollars as well really get hurt here.
Yeah, I'm glad you brought the Aussie into the conversation, because this week we have the RBA, the Bank of Australia. We've heard about brush fires, factor in some coronavirus concerns. I mean, it's going to be tough for them to act with all this uncertainty. I'd imagine expectations are for them to stay pat.
No doubt about it. I mean, trading down to near 10-year lows here. And, you know, in the short run here, there seems to be a lot of headwinds going into the Aussie dollar here. And with the RBA meeting later this week, you know, you may see some sort of instance just like what China did overnight, where they're trying to support the dollar and maybe injecting some cash into their system.
Yeah, you know, anytime we're talking about the RBA and Australia, I oftentimes start to think about the RBNZ, the Reserve Bank of New Zealand. Let's talk about last week, the FOMC left rates unchanged. Was there anything that stood out there? Because we just mentioned how the Bank of Australia is expected to leave rates unchanged. RBNZ next week, in theory, expected to leave rates unchanged as well. I mean, it seems like, and even the Fed mentioned this last week, it seemed like kind of echoed some of the comments in the past, how we're on this very much wait the course and wait and see type mode.
It is definitely a wait and see, and I think that any knee-jerk reaction, especially to the coronavirus, whether it's the Fed, whether it's RBNZ or RBA, that's going to spook the market. So I don't expect any changes here at all. You know, I think if they came out and said, you know, we're going to lower rates by 25, 50 basis points here, that really spooks the markets.
Yeah, I mean, we saw the Bank of England leave rates unchanged recently, and that actually helped lift the British pound until, well, recently it's rolling over a bit amidst some of the concerns with Boris Johnson. But let's talk a little bit about how we've got a big week ahead, not only in terms of manufacturing data today, probably the more closely watched number, the ISM, is going to be at 10 a.m. Eastern today. But let's talk about the big kahuna, Scott, on Friday. I'd imagine everybody's going to be focused on the jobs data. It's been softening a bit, but still labor remains very strong here in the U.S.
It has been softening a bit, but again, it's been softening from some just blowout numbers. So
Good point.
You know, you got to take that with a grain of salt here. I think the expectation, if I'm not mistaken, was around 168, 170, if I'm not mistaken, which, you know, seems to be a moderate number. You know, it seems to be one of those Goldilocks type numbers if it comes in there. I don't think we're going to see a big deviation one way or the other, you know, excluding whatever kickers you may see from the holiday season and some of the temporary hirings that you saw from the holiday season.
Yeah, it'll be key to watch the wages component as well. Scott, really appreciate you joining us to help us break down some of the recent activity in currencies related to the coronavirus and a look at a couple across the board. Scott Bauer joining us here this morning on a Monday. Scott, thanks again. Scott's the CEO of Prosper Trading Academy.